Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. Kelvin Wong, founder of the Lighthouse Chronicle, is our guest today. Kelvin, good afternoon.
Hey, good afternoon and happy Friday to you, Brian.
Thanks, Kelvin. Now, before we get your insights, let's take a look and see how the numbers stack up across the region. We start with cryptocurrencies, though. Bitcoin is at 23,539. It's down 1.43%. Ethereum is at 1,643. It's down 1.78%. Now, looking across to regional equity markets, we start close to home with you, Kelvin. We start with the SGX, which is down 0.12%. Bursa Malaysia is up 0.06%. Shanghai is down 1.44%. The ASX All Ordinaries is up 0.57%. The Nikkei is up 0.38%. The Hang Seng is down a whopping 1.91%. And rounding up the numbers, we've got the Kospi, which is up 0.5%. Kelvin, your view on market performance in the first half of the day?
Sure. So if you look at, very interestingly over here, is that one of the weakest performer will be the Hong Kong or the China-related markets. So they are down close to 2%. So you have the Hang Seng Tech, so about 2.1%. So what we could see over here is that markets are always forward-looking. So despite this morning, we have a very strong China services PMI data, which is showing signs of economic recovery post-COVID zero restriction lift-off in late December. So that's about, I think, above 52 level. So that's, I think, believe it's the highest level since 6 or 7 months back for the China economy. But however, that has been pretty much priced into the stock market that's very related to this China reopening team play. So that's actually explained this profit taking that is being seen on the Hang Seng Index and the Shanghai Index that we are showing on the screen right now. So later I'll share towards the end of the show what other interesting data going forward we should actually keep a lookout for China-related stocks.
Now, Kelvin, what really came out overnight was also the Apple numbers, which saw Apple sales drop 5%, which is the largest quarterly revenue decline since 2016. Now, is that a bellwether then for poorer results to come?
Well, I would say that instead of a bellwether, but it's more of a bellwether of price action for those who are looking for short-term, we call it opportunities in trading the major US stock indexes. So as you know that Apple itself is one of the US big tech largest market cap in the S&P 500 and the Nasdaq 100. And what's interesting over here is that prior to Apple's lackluster, we call it earnings number that were released after the close of the US session. During last night normal US session, there was actually a big gap up in US major big tech stock. Why? Because of Meta, which is Facebook. Meta Platforms actually announced this massive share buyback program. Everyone is talking about this is massaging the numbers, but nevertheless, it created this tremendous amount of buying climate that allowed the Nasdaq 100 to actually rose close to about 3% intraday yesterday. So now what's interesting over here is that it came out this lackluster Apple number that causes this Apple to actually drop post to, I think, negative about 2% after hours.
But do you have some charts to show us, Kelvin?
Yes, sure, yeah. So let's go to the chart of this S&P E-mini futures. So this is not the S&P index, it's a futures which is actually trading right now in Asia session. So what I could see over here is that this pop-up over here yesterday was actually caused by Meta, the Meta event, Meta Platforms share buyback event. Then it actually did a bearish reaction after Apple earnings announcement. So what I could see over here, the bearish reaction actually come out from 4210, which is my key medium-term pivotal resistance level. And what's interesting that going forward today and early next week, if it starts to reintegrate back below 4130, we could actually potentially see a very short-term bearish pressure coming into the S&P E-mini futures, which is translated to what I call a potential negative feedback loop into the US stock market in general going forward. So something very important to watch about if one has a very short-term trading horizon on these indices.
Now, the other thing that we need to be looking at, David, Kelvin, is really the non-farm payroll numbers today. What is the expectation there, and what should we be looking out for?
Okay, so very quickly, right? Before this non-farm payrolls data, more or less, right, we are actually expecting a number that is kind of lukewarm, but it's more like a Goldilocks scenario for the U.S. economy. Nevertheless, it's say that the economy is not too hot, which actually preventing the Fed from actually hiking too aggressively. So that is the narrative that's being priced in the market in the last 2 or 3 weeks. But one interesting I want to share with you over here is the price action of the various FX pairs in the way of how I look to formulate a short-term trading strategy on the FX ahead of this non-farm payroll data. So if we dive into this is the past 5 days data. So just very quickly, right? If all these lines are actually plotted against the US dollar, means US against sterling, US against Aussie, US against Kiwi, the majors. So if these lines are going up, that means dollar is strengthening. Okay. So what interesting is over here is that you see this steep fall, this steep slide in these are all Singapore time on at 3 a.m. That was where Powell starts talking post FOMC. The dollar actually sell off, and since then the dollar has started to recover. Almost most of the dollar pair has started to recover almost pre FOMC levels. So what's interesting over here is that dollar has shown signs of strengthening, and if you look at the yen and the Swiss franc, they're actually pretty resilient against the dollar. So what we could see over here is that especially the Swiss and yen itself are still relatively strong against the dollar versus this dollar recovery, short-term dollar recovery that was actually prevalent in the other majors that is seen right now. So if I were to look at this, we call it a chart itself, and based on the positioning itself, we could actually start to see very interesting yen crosses to actually look at ahead of this non-farm payroll data. So very quickly, one of them I want to share with the audience is sterling, Aussie yen. So you will see Aussie yen very quickly on the daily chart, right? The price action, the recent push up in the price action, which actually coincide with this dollar weakness as well, the dollar sell off in the last 1 or 2 weeks, actually managed to did a negative reaction of the 200-day moving average. And this 200-day moving average, right, has reacted previously similarly on 13th of December, where the Aussie yen sold off as well. And right now, it actually reacted same as well on spot on 26th of January and starts to trade lower lows, what you could see over here. So definitely this is a key what I call psychological technical impact that's having on the Aussie yen right now. And also bear in mind this descending trend line resistance that is keeping previous upside since 24th of October last year. So very quickly, right, as I've said that this is a short-term trading sell. Let's look at the shorter term horizon, whether has it hit oversold level. So very quickly, the hourly RSI hasn't gone down to the oversold level yet. And what we could see over here is that it seems to me that based on the current trajectory of this Aussie yen in the hourly chart, it's now actually showing a bit of downside acceleration. Okay, a bit of downside acceleration, trying to break below this short-term descending trend line support channel that I draw out here. So what levels that we're watching ahead of FOMC is yes, it appears to me that we have a bearish bias short-term on the Aussie yen. So I'm looking at a key level to actually maintain this bearish bias on the Aussie yen will be at this 91 40 level as my key short-term pivotal resistance. So potentially if this level didn't surpass, we could see its trajectory continuing downwards potentially, at least in the short term that will last 1 to 2 days towards this near-term support level that is coming in at this 90. All right. At 90 figure level.
Okay.
So that's my short-term take on the Aussie yen. So we still have a pretty much bearish bias supported by these technical factors that I share with the audience here.
Kelvin, thanks again for your insights. Thanks for coming on the show.
Sure. Brian, do we have a bit more time? We are talk about what's to look ahead for the next week data.
Sure. Let's cover data that's coming out ahead. Go ahead, Kelvin.
So so for next week, right, actually the data is on the data calendar is pretty light. So actually two data I want to highlight for the audience is definitely RBA interest rate decision, which is on Tuesday at 11:30 a.m. Singapore timing. And lastly will be China related data, which is actually linked to my earlier thoughts, thoughts I shared with you where markets started price ahead of this better than expected, we call it China PMI data, will be the inflationary rate, both on the consumer side as well as the factory gate, which is the factory inflation numbers. So if these numbers come out as on the low side, showing no signs of inflation spiking in China, that's actually pretty much positive for we call it a China equity risk on perspective. Why? Because as you know that since late December, the China central policymakers has been embarking on more of a we call it expansionary policy, both in terms of physical and monetary. So the inflation number came rather kept or rather not so hot. It will actually allow them to actually further embarking this opening of liquidity type policy to actually stimulate the Chinese economy, which is overall net is medium term to long term is positive for the Chinese equities.
Thanks again, Kelvin. We've been speaking to Kelvin Wong, market strategist and founder of the Lighthouse Chronicle on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez. His video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.